All right, and welcome back for another episode of Carnivore Trades. Today is Tuesday, May 24th, 2022. If you're not done so already, like the video, comment, subscribe, etc. Come follow me on carnivoretrades.com for swing trading alerts and analysis. Doing a little something different here with the corner webcam there. So let me know if you like that. May have to change the title of this video. So I got the thumbnail all ready to go called Classic Bear Raid. And we're getting a bid here, a pretty sharp bid in the, it's about 3:40 p.m. right now. Interesting stuff. So I've got a couple of points to hit on here. So we gapped down and we just puked this morning. Everyone knows the story was Snapchat. Their earnings, let's take a look at Snap right now, getting roasted down 42% here, now clipping below 13 bucks. And so basically the story was, okay, so Snap is a $36 billion company. It's probably smaller than that now after today. And so essentially that took down Facebook and Google, right? So because they're kind of peers or whatever. So that makes sense that they would sell off, right? Let me tell you, like this is just an excuse for the bears to sell anything that moves. And I'll tell you why. Because Zoom is a comparable company to Snapchat in market cap. And what's Adobe doing today? Oh, Adobe's red. What's Oracle's got to be green? Oh, no, Oracle's not green. ServiceNow, Cloudflare, Unity. Okay, these are all Atlassian, all red. IGV, the whole sector is red today. So Zoom's not helping out any of these cloud stocks. It's not helping out the triple Qs, but Snapchat apparently is such an important company that we're just down 2.5% here on the triple Qs. Now almost, now down 2% as we bid here a little bit. As spiders may close close to the flat line here. We've got about 20 minutes left. I certainly wouldn't rule it out. We'll see what we get out here. We could get a doji. I was kind of looking for a doji kind of day here, and I'll explain that in a minute. But overall, basically, this is just an excuse, or it was an excuse for the bears to just push the market lower with any sort of news they could get their hands on, right? They're just selling every single rip. Doesn't matter if it's 1%, 5%, 10%, they're selling everything. So that's kind of what we're seeing right now. And by the way, we are now 3 for 3 trading Zoom this year. Just took 10.7% on that. Selling after hours yesterday, so 3 for 3 trading this stock this year. So a nice move there. If you want to get in on that, come find me on carnivoretrades.com. Crushing it this year, beating the market by almost 30%. And I'm telling you, this market is all about not losing money when we're making money in this market. Anyways, let's talk about the spiders here. So yesterday, nothing's really changed, right? We're still just looking at this upper trend line. We're looking at this lower trend line, this falling wedge pattern. And basically, we're knocking on the door here, right? So the more times you hit this, eventually it's going to break, right? And there's such a steep decline. It's really kind of unsustainable when you're declining this steep. It's not like we're coming down, bear flagging for a few weeks. This makes sense. Come down, bear flag for a little bit, kind of get oversold, then you come up, have a counter trend rally, then you sell off. Guys, we have 7 weeks down on the spiders here. Eventually, I don't care if it makes me a perma bull to say this, but you can't have. Eventually, the S&P will have a green week. I'm just. Eventually it will happen. I know it's draconian to say something like that, but that is the reality. And let me show you something. I did tweet this out earlier today. Let's look at the Russell 2000. So I've been saying this every single day, but for those of you maybe new watching, last time the Russell 2000 did not make a new low. This is actually a higher low in the cash session on IWM. Make higher lows here. Let's take a look at what happened. So let's flip over to the triple Qs. I'll just use this chart here. So we made the lower low when the Russell was making higher lows, and we had a falling wedge pattern. What do we have now? An even bigger falling wedge pattern, and the triple Qs making lower lows. So again, this is the same trend line essentially that we're seeing on the spiders. And eventually, it's likely to break. I mean, that's just what probabilities dictate. I've showed you guys the support levels every single day, 50% retrace on the triple Qs, 50% retrace on the IWM. Tesla just hit a 50% retrace, which is actually getting roasted pretty hard today. Tesla is a weak stock here, very oversold though on the daily time frame. But essentially, probabilities at some point dictate that we're going to have a counter trend rally. I mean, eventually these late shorts will get punished. The market makers are going to say enough. We're not paying out these puts anymore. And, we're going to have a nice bounce, and then bulls will get suckered in. And that's just the way things go. What happened up here, it's just rinse and repeat. But overall, a nice showing for the market because you had a nice bearish inside bar here, especially on the Qs. You still kind of have it here. We'll flip back to my normal chart. But you know, bearish inside bar on the daily, and it's starting to get negated a little bit. Let's take a look at the spiders here. So the spiders are negating that bearish inside bar currently. If we can close above that high, that would be a very bullish look going into tomorrow. If not, you still have a doji. And let me show you this pattern here. So we've had this sell-off here, little bit of a tail kind of inside doji candle, then an up move, and then a fade the rip. Came down here, had a tail candle, doji, big pop, and then we faded the rip. Came down here, tail candle, big move, doji, another rip day, then fade the rip, tail candle, up day, possible doji. So are they going to do this again? It looks like it. It looks like they're going to do it again. My only thing is, you know, and for tomorrow, we would look at 403.80 is probably your max upside, which would coincide with that 20 period moving average. The only thing is, like I was just saying, eventually market makers are going to say, no, like you're not getting this easy trade again. Eventually, you know, too many people are going to catch on to it and eventually it's not going to work. So if this happens, we break above this wedge high, you know, you could make a case for, you know, have breakout pattern. So we'll see what we get tomorrow. Let's look at the semis. So they already had kind of a fake break. Excuse me, not the semis. I believe it was cloud. Either way. Or no, I think it was Goldman we were looking at here. Yeah, there, it was Goldman. It was the fins. But either way, we'll go back to the semis here. So you have this kind of topside trend line building here on the semis. And again, weaker on the weaker side today. You can see you had this kind of bearish inside bar, just like the Qs. Started to dip down here around 3 o'clock, and then it got a bid. So we'll see if it can make a higher high going into the close here. Markets are bidding up. We got about 15 minutes left. But again, higher lows here on the SMH, potentially higher lows here on the IGV. Again, that was helped out a little bit by Zoom, but again, it's not really helping that much. And that's why, you know, to say that Snapchat is the only reason for this selling is really kind of, it's just incorrect in my opinion. It's really just an excuse for the bears to fade every rip. So that's kind of what we're looking at here. Anyways, let's move on here. So Dow Transports coming nicely off the lows. They were down pretty tremendously earlier. Take a look at the intraday here. So big sell-off here in the morning, and now trying to get back above that. Dow Transports have been on the weaker side, though, and that's definitely got to be respected. But getting, you know, it came into a nice level here. I showed you guys this on the weekly. So right into that 13,000, you know, 13.2 area, getting a nice bounce. It looks like that level is getting defended right now. And so the transports may have a little bit of life here in the near term. As far as rates are concerned, not a huge move today, but it did fade a little bit lower. TLT is higher, close to that 119 handle currently. And again, you kind of have a level here on the 10-year. So 27.24 is this pivot low, and then it's basically coinciding with that 50 period moving average. So maybe it gets a little bit of a bid here. Again, there is a kind of a head and shoulders pattern that should get you down to 2.5 on the 10-year. It's not going to go there in a straight line. Maybe it bids back up a little bit. Maybe it puts in a bear flag or something like that. But 10-year does look like it needs to be in backing and filling mode. Same thing with the 30-year there. HYG, nice little pop today. So that is green. Let's see if it can get a close above that 20 period moving average. That would obviously give the market a huge lift here, as high yield debt is very important. It's very, very beaten down here. But overall, you know, it hasn't shown much. It, you know, tried to get above the 20 period moving average back in late March when we had that big squeeze. It did, and then obviously it failed. We're not looking for a huge move here, but maybe a move back to 78 if the market can get a little bit of a lift. All right, home builders here. Did make new 52-week lows, but it looks like they're saving it at the end of the day. Again, I told you guys upside here on ITB would be about 60 bucks, 61 maybe, and then the XHB, so that would probably be about 62 and some change there, but that's if we do get a bounce here. And then VNQ, possibly putting in higher lows, so a nice pop for VNQ, up almost 1%. Looks like it can potentially make a higher high. You're going to have resistance at this red bar and this gap fill. 20 moving average at this point, I would say, is minor because you've chopped around too much, but it could be a little bit of added resistance. All right, so now on to fins. We talked about Goldman a minute ago as I got confused there. XLF here, holding up well. So with the market down as much as it is, XLF is actually having a decent day. So it's basically flat on the day. JP Morgan is actually green on my screen here. Let's go get JP. So JP, you know, a nice move, and I talked about this yesterday. It got a nice bid. Diamond made some comments yesterday that said financial sector is fine. So that kind of, gave the market a lift, and gave financials a lift, obviously. We'll see if it can make a higher high here, but XLF up in good shape, and that is a good sign for the market. Let's look at the broker dealers here. Broker dealers kind of still a little bit on the weaker side. Again, that's more tied to high yield debt, but not a terrible pattern here. If it can get, off the lows and close above this red bar high, you could potentially have an ABC up move, maybe take it back to that 420 area. All right, so energy here, another kind of quiet day for crude. I will say, though, this pattern is starting to look a little bit more on the bullish side here in the near term. The one thing that would change that, if you came up here and filled this gap and then rejected and took out this pivot low, we're probably going to be, headed back down to at least this trend line. But you do have a series of higher lows in play now. So you got the lower highs, the dominant lower highs, but you are more recently, you're making higher lows. So, maybe crude makes a run at 120. It's possible. I wouldn't rule that out. The chart is shaping up a little bit better, especially on the weekly. So we'll see what we get. You do have kind of a small bullish inside bar there on the weekly, but again, we'll see what it does if and when that gap fills. Ultimately, that's really going to tell me a little bit more. All right, XLE here, again, not too much to say. Close to 52-week highs. You got that red bar there and that trend line. XOP flattish as well, as was OIH. Now fractionally positive here. Actually, well, up almost 1%, which isn't a huge move for OIH. And then nat gas here, close to double top. I can't honestly tell you if it's going to break it or not. I still think it's probably going to come back down and test 7. At that point, I would probably be a buyer, but we'll see what we get. I was just showing this to members. You can see historically, it does have trouble with that 9 handle. So you got up here to, pierced up almost a 10 here back in 2000. And then right here, 9 and change. Right here, you got up to, 850. This got up to 9 and change here. So, historically, it does have trouble with that $9 handle. Doesn't mean it can't go through it, but again, it's just look at the monthly here. Look how overbought it is. You'd see these. Well, there's a max fib extension right there, and that 2618 right there that I was working on. So maybe that helps it pull back in a little bit. But again, you did consolidate a little bit here. So I wouldn't rule out a move through double top, but ultimately I think it does come back down and kind of repeats this sort of a pattern that it had going on back in September and October. All right, anyways, dollar index continuing to pull back a little bit. Looks like it's stalled out just a little here, but ultimately it's headed to that 50 MA, which coincides with this little pivot here. So dollar is in backing and filling mode, as I did call, and gold here continuing to move up another 1% today, up 0.93 to be exact. And you're going to have some resistance at that 100 MA and this red bar. That's where it wants to go in the near term, but really got a nice level here. And I'm glad we picked up those GLD calls last week, because those worked out really well. Just ended up being a really good level here. And sometimes the market gives you that. You just really monthly inside bar low. That's usually going to get defended on the first hit, and that's where we got. And nice little pop there for gold. As long as the dollar continues to pull back, I do expect a little bit more upside here in the gold market. GDX, let's look at that really briefly. So again, this is going to have some trouble here at that 200 and that red bar high here, where there's that gap window. So I don't expect GDX to have much more upside in the near term. So it looks like more of the metal is leading the minor, which is a little bit more on the bearish side. But, all things considered, it is getting a nice reflex bounce finally. And silver also having a nice day, trying to get above that 20-day moving average. If it can do that, it can finally get up to 23. But again, you guys know I've been saying pretty much every day, silver is on the weaker side, and you got to respect that. Platinum also kind of just a quiet day here, but it is kind of inside of this up move here. So maybe it wants to consolidate and attack these highs here in the near term. I still think it needs to go lower ultimately. And same thing for palladium, kind of just an inside bar pattern here on palladium. And then copper finally, again, like I said yesterday, maybe if it flags up, if it can go attack that 445, 450 area. So you got a nice little test candle today, and then close back inside of yesterday's range. So I like that for a possible move here on copper, but I want to see a little bit more consolidation here on the daily time frame, and then maybe you can go up there and attack those levels. All right, so lastly onto Bitcoin. I'm thinking possibly Bitcoin's move yesterday may have predicted today's action. So yesterday was a nice up day for the market, nice little gap and go day, and Bitcoin ended up closing red. So that may have predicted some of the move down. in the equity markets. You can see here on the intraday, it's been struggling to get above this area here. So you had a nice pop here around 12 o'clock, 11:30, 12 o'clock in the afternoon. We got above this pivot, we got above this area, and we just couldn't sustain it. But, you know, maybe if it puts in higher lows, it has a chance to run. Again, Bitcoin's just been such a good leading indicator for the equity markets. So, you know, we'll see. If it starts bidding up in the overnight here, then the market probably has an update tomorrow. By the way, NVIDIA has earnings after the close, so that will be market moving. And that could possibly set up the scenario I was talking about earlier for a sell-off Thursday, but we'll get into that in just a second. As Ether, I want to talk about this. So this basically tested the low end of this red bar, and it's, you know, it's trying to get a bid off of that. If it can, you know, reverse and again close above this red bar high, that's going to be a positive here for the market. Same thing with Bitcoin. There's your red bar high, and it is making potentially a higher low. So we'll see what we get tomorrow, but those really are the levels. All right, so back to the spiders here. Got about 4.5 minutes left before the close. So like what I was saying, I think we have Fed minutes tomorrow. So maybe that moves the market. Now, typically or lately, the FOMC has been a bid, and then the Fed minutes have been a sell. If this pattern repeats, however, the Fed minutes should be a buy tomorrow, and NVIDIA's earnings should be a sell. If this pattern repeats, we'll see what we get. Honestly, I have no idea which way it's going to go. All I can do is look at the charts here and follow the technicals, which is really what we're doing here. So when we come into a 382 on the spiders, and I'll show you this again. I know I've showed you this before, but you come into a 382 on the spiders, and you have 7 weeks down into that, you know, and, you know, sell the rip works for 7 weeks in a row. 20 moving average works to sell 7 weeks in a row. I got to think at some point we're going to have that kind of, you know, all right, enough is enough. We're not going to let you have this easy money anymore, and you're going to get ripped to the upside, at least in the short term market. You know, it just is oversold. Everybody knows it. All right, guys. Anyways, going to wrap it up here. One more look here at the spiders. Yep. So coming back in, we might get that doji after all. Nice pop though in the market coming off the lows. So a decent little recovery from the bear raid, which I think was used. The snap earnings were basically just used to do that. And again, just an excuse for them to push the market lower. Anyways, guys, going to wrap it up here. Take care. Come find me on carnivoretrades.com, and I'll talk to you all tomorrow.